Welcome everybody to the panel, New Forms of Digital Money. You can follow this event on social media too using the hashtag digital money. I think the last 3 years have dramatically altered the way we live our lives, how we finance it, how we transact, even what we mean, I think, by the term money. There are several new forms emerging amid unstoppable innovation and rising crypto adoption too. Whether it's digital assets like stablecoins, unbacked coins or digital tokens, or central bank digital coins and forms of money, the promises are vast. Efficiency gains in cross-border payments, greater inclusion, and narrowing of the digital divide. However, the perils are also potentially vast too. In fact, we mean the opposite of all the things I just mentioned there. What we do know, however, even today, is that all of this is having and will have a profound effect and implication for policy, for regulation, and for the international monetary system. For insights, there can be no better people to discuss this with than two of the guardians of that system. I mean the International Monetary Fund Managing Director, Kristalina Georgieva, and the General Manager of the Bank of International Settlements, Augustin Carstens. Welcome to you both. Whether we're talking about crypto assets, unbacked coins, stable coins, or CBDC, I think you'll forgive me the Lord of the Rings analogy, but do you see there being one ring to rule them all, whether it's public or private, or can they happily coexist and work together? Kristalina, I'll begin with you.
Wonderful to be with Augustine and with you. We have been served for many decades by public-private partnership when it comes down to money, with the private sector providing intermediation and the public sector, the central banks, making sure that the system works efficiently, effectively, and fairly. This remains as important in the world of digital money as it is in the world of fiat money. Private sector brings innovation, creativity, and multiplicity of options. But the central banks also need to make sure that there is a monetary policy that serves the objectives of the country and protects consumers. So when we look at the fast expansion of digital money, what we see is private innovation when it comes down to crypto assets, stable coins, to the technology that underpins them. But we now see more and more central banks recognizing their responsibility in two ways. One, how do they standardize and regulate this new world of digital money? And two, how they can offer their own equivalent for the new digital world, central bank digital currencies. And what we see at the IMF is that, to a certain degree, the public sector has a heavier lift today because it has to catch up on how technology is diversifying options. What does it mean in terms of standards and legal frameworks? And also, what exactly is the purpose of central bank digital currencies in a particular country context, how they operate across boundaries? And I want to make 2 points, and then I know that Augustine, who is the king of digital money, is going to add quite a lot to that. The first one is that for the regular consumers of money or users of money, there is, as you said, confusion of terminology. Crypto asset is not the same as stable coin, not as the same as CBDC. Crypto assets could be unbacked. In other words, it is based on the trust in the functioning of this asset. And it is more of an investment opportunity than actually money. Whereas stable coins, they do have assets that back them so they can be stable. But even in this universe of stable coins, some are more stable than others. And central bank digital currencies are indeed a way for the central bank to step into the world of digital currency and offer to the public a step into the digital world to protect also the interest of everybody and to be able to push forward monetary policy in a way that also responds to the needs of the economy. Diverse world, there is space for everyone, but in this space for everyone, we would get good results only if we advance more the regulatory standardization approach that I started from.
Yeah, there's space for everyone, but it has to be a safe space for everyone, to your broader point. Agustin, your take on this, please.
Yes, well, one thing that we know from many years and even decades, and even in some cases centuries, is that what central bank money brings, and not necessarily central bank digital money, but central bank money brings, are four characteristics that are almost impossible to be matched by privately supplied currency. And that's safety, finality, liquidity, and integrity. In particular, the issue of finality is key. That means that once you exchange a central bank money, you know that the transaction is good, that it will stand no matter what. And also when you want to scale up or you need liquidity when there are like a financial crisis, only the central bank can come in and provide those resources. These particular attributes that central bank money has is not replicable by private sector money. And that's why what we have seen recently is that with all these hundreds and even thousands currencies that are out there, they mostly perform as investment vehicles or speculative assets. They really have not been able to replicate the role of money of being a good medium of exchange, deposit of value, and a medium of account. Now, that doesn't mean that all the private innovation, all the technology that has been implemented in developing some of these cryptocurrencies is worthless. On the contrary, it's extremely valuable. And I think that in terms of central banks bringing a more modern or adequate representation of money in the digital world, there is a lot of that technology that we can use. And as a matter of fact, that's what we're doing here at the BIS, studying all the different technologies and applying them in prototypes to further the application of central bank money. We had recently here an event among emerging market central banks. 26 central banks came, and 90% of them are already working in a very advanced phase on central bank money. So I think that in general, to promote the additional digitization and even making CBDC a reality, we need to work very closely with the private sector. We need to invite different type of innovators, but there is the centrality of central banks that is irreplaceable. And that's why it is so important to have central bank digital currencies as a reality, hopefully relatively soon.
Wow, I mean, that's a fascinating statistic. 90% of the emerging market central banks that you're talking to are in some stage of development. We'll come back to central bank digital coins specifically, but I do want to bring up the Global Financial Stability Report that was launched today, Kristalina, and people should look at this and get a sense. Very recently in your GSFRs, you've been mentioning financial stability risks. You've mentioned cryptoization too, and it's mentioned in the latest one, as I mentioned, out today. We're talking about a $2 trillion plus market that's rising now in many different forms. How far away from the point upon which you say, look, we see significant risk of financial instability as a result of what we're seeing? And you've touched on it too. There are many forms that we're seeing of digital assets. How close are we to the point where you raise the flag and say, we see a problem?
Well, the reason we are talking about cryptoization as a growing risk is because of the size and the speed with which crypto assets are expanding. Just since the Russian invasion of Ukraine on February 24th, crypto assets have expanded by 9%. Now, we must immediately stress that they go up and they go down, and 2 trillion is not the highest point they have had.
No.
But it is now systemically relevant, and therefore much more attention has to be paid to what next. And what next is we have to have a policy approach that is proportionate to the size and risk they represent, that reflects on what is the purpose. Is this just an investment vehicle, or it is an instrument that wants to play a role as money? And third, we have to be clear to what extent there is risk for monetary policy stability that comes from the fact that crypto assets can be entered and exited very quickly, and in many cases, not necessarily with visible trace. So this is why we are working very closely with the Financial Stability Board, with BIS, on what does it mean to have crypto assets evolving without presenting a risk to financial stability, stressing that the more we have regulatory mechanisms to define the wallets, so the wallets are regulated and transparent, that there is some harmonization of policies in different countries, so we don't end up in a world of chaos when it comes down to the crypto world. And we recognize that in that sense, we are in a particularly important and more difficult moment because there is a risk of fragmentation in the world that could affect negatively our ability to offer citizens and businesses a safe way to invest in digital assets and to rely on the use of digital currencies.
Yeah, you're raising some very important points about store of value use, of medium exchange use, and it ties in, I think, to what you've both discussed in terms of and pinpointed on central bank digital coins and this need for central banks to catch up, if not take over, and not necessarily take over, but at least lead on this and have perhaps some kind of global regulatory standard. I know it's a big ask in this day and age. Agustin, come in here. Can we have a situation, and if we hone into central bank digital coins, as you were doing so before, have a way of exchanging value that's as easy as perhaps sending an email, it's as efficient, it's as cheap as doing that? And is central bank digital coins the way forward?
Well, definitely that is the objective of the work that we are doing. I mean, at the end of the day, the use of central bank digital currency should be as efficient, as reliable as using cash. And the idea would be that it has to be operational 24/7 with tremendously high standards of security. So the different proofs and the different tests that have been done on different prototypes already show that this is possible. The challenge is huge. I mean, imagine a situation, for example, in a very large country like China, the amount of transactions that need to be cleared per second is in the millions. So you can really get an idea of how efficient the system needs to be. And of course, there is also the reputational risk. I mean, central banks cannot allow themselves to say the system is down, or you cannot use your currency because it's not operational. So the degree of reliability of the system has to be huge. That's why all the central banks are working on this. That's why we are investing a lot of resources in precisely developing the technology in such a way that it is a system that works no matter what. I think in that sense, what, for example, Chairman Powell has said is of the essence. This is such an important program, such an important project that is better to get it get it right than get it quick. And so we're working on that very, very intensely. And yes, I mean, I think that it will be as efficient as cash, as efficient as sending a mail, probably even better than sending a mail, you know. And this should allow us also to facilitate bringing on board into the financial system low-income people, people in remote areas, you know, and facilitate financial inclusion.
Kristalina, is there an inevitability about central bank digital coins? Because I know much of the work that you've done, and I remember a conversation between you and I about certain nations that are adopting Bitcoin as a national currency of the future. And I'll always remember your response to me, which was, just because you can doesn't mean you should. But when we're talking about central bank digital coins, there are clear benefits. What are some of the issues and concerns that you're already seeing? Because there are nations that are already adopting central bank digital coins, and they're just getting a sense of how they're working.
It is very important to first think why you want to have central bank digital currency, what are your objectives, and then about the technology that you're going to apply. And of course, the question of interoperability with other central bank digital currencies is paramount. Otherwise, we would be in a fragmented world, and on one level, we would get fast operations within those that have access to a particular CBDC, and on another level, we would have difficulties in transacting across. In other words, how do we build tunnels that connect CBDCs in a way that makes the world of tomorrow one that allows economic integration, facilitates trade, and as a result, helps us to have more jobs and better standards of living. So when we look at the risks today, we see two. One, how are CBDCs designed vis-a-vis the role of banks and also private sector digital money? Do we risk this integration of how money flows into the economy? In other words, are we going to strengthen or weaken the intermediation function that banks are playing? And two, how is the capacity of the private sector to onboard consumers, clients in a way that a central bank has not done in the past? How is this going to be integrated? This is a very important question for the efficiency of the financial system. And then we come into, our central banks going to be constantly revamping their technological capabilities to serve millions of consumers? How do they integrate their function with the function of private money providers? Augustine said something very important. In my country, we have a saying, rush slowly when you're doing something important. And that is exactly the case today. And what we see very clearly is the need of bringing countries together to compare notes so they actually experiment with knowledge of what others are doing, and we have a better chance to step into this digital future without too many policy mistakes made. Rush slowly.
Rush slowly. I'm writing that down because I love it. Your point about interoperability ties me to the next conversation that I want to have, and we'll address this, I think. I'll ask you both to address this when we come back to it, but it's in light of what we've seen with the war in Ukraine. I spoke to Ukraine's deputy digital minister a couple of weeks ago, and they already had an incredibly high adoption rate for crypto, but they, as a government, immediately legalized and started raising and distributing funds via crypto. I think they now accept 14 different cryptocurrencies. There's been an NFT, a non-fungible token, that raised $6.5 million as well. I just want to get both your take on what we've seen in terms of broader crypto use as a result of the war in Ukraine and how the Ukrainian government's doing it. Kristalina, I'll begin with you.
The Ukrainian authorities were fans of digital currency before the war, so they have done quite a lot of work. They're looking into central bank digital currency. It is not a new topic. They seize the need of their people to allow the use of digital channels to send aid to Ukrainians, and that has been really successful. Low cost, fast, gets to people who need it, can be deployed immediately to support families. But let's be clear, in terms of size, in comparison to the more traditional forms and channels, it is relatively small. Our data shows something in the order of perhaps 100 million. This is not nothing, but just to give you a perspective, we have provided $1.4 billion emergency financing to Ukraine. So it is useful. There are, however, two issues that came across. One, that because of the demand in Ukraine and the difficulties in Ukraine, it looks like maybe pricing has been a bit higher than on average. So if you want to bring down cost, that was not fully achieved. And two, there have been some scams, unfortunately. We know that in the digital space, there is a segment that is of wrongdoing. Luckily, in this case, on a very small, in a very small scale. More interesting is how Ukraine is thinking of its future. And I'm very impressed, even under the incredible hardship of war, that the thinking there is to have standards and wallets that are regulated so there can be safety and trust for the users of digital money. And I wish the Ukrainian authorities all the very best in pursuing this longer-term trajectory.
Yeah, and you raise a great point there. The Deputy Digital Minister's point with me certainly was that he believed crypto could be a swift way of raising money and distributing it. But the point about scams, I think, and we've all seen those, is a hot topic and a highly valid point. Agustin, come in here too, because I think there's 2 points raised here. One, perhaps the ability of a central bank digital coin of the future to get money to people very quickly in a crisis or in an emergency situation, or even those that have had to flee across borders perhaps too. Your views on what we've seen and perhaps what we might see in the future?
Well, thank you very much. In general, I fully share the views expressed by Kristalina. The problem, I mean, yes, different cryptocurrencies can be a way to send money right now, to exchange money in the Ukraine, but the limitations that are well known of crypto assets are showing up there. Scams, pricing, volatility, and so on. Now, this also helped us imagine a world in which a CBDC were present. And I mean, it's obvious that the distribution of bills in the country is completely disrupted in time of a war. That problem probably would not have happened or wouldn't have happened if we had CBDC. CBDC could still be working, and therefore many of the problems that are faced now would probably not exist. Yes, for example, in case of a hurricane and so on and so forth, and you want to send resources to affected people, you might be able to do it through transfers through CBDC. So it certainly would help in terms of even operationalize public policy in terms of support in case of need. Therefore, I think precisely this example of Ukraine help us highlight some of the potential benefits that CBDC could bring to the table.
Kristalina, how concerned are you that, benefits aside, that crypto could and is being used to circumvent sanctions, whether that's as an individual that could perhaps transfer wealth into cryptocurrency and take that across borders, or even in the case, and we've discussed it, perhaps as a nation state like Russia, if they had access to a central bank digital coin, and we know they're developing it, but if we had that interoperability that we were speaking about earlier, perhaps it's a way for a nation state to circumvent sanctions too.
We are looking into this issue, and obviously there is a big platform to study it, unfortunately, because of the war. And what we can say is that the evidence is not so strong that digital money can be used to go around sanctions. Why? Because there is still a significant role for the financial system. Different countries approach the issue of digital currency differently. Russia itself is actually moving in the direction of CBDCs, not there yet, but this is of interest to Russia. It is not yet in a place where we see evidence for this being the route around sanctions, because at different points, this route gets into the financial system, and the sanctions are quite clearly preventing operations. Is it possible in the future to use it more for not only avoiding sanctions, but for criminal activities? Yes, this is a concern. The FATF has come up with very clear standard for digital money, saying we have to avoid money laundering and financing of terrorism. This is taken quite seriously, as you can imagine, by central banks around the world. So I expect that the avenue for criminal activities is going to be narrower and narrower the more we carefully standardize and regulate how this digital money get into digital wallets. What is the control environment to prevent wrongdoing on a scale? And if I may just add one point to the previous topic on the potential for digital money to support people, communities in trouble. I have family in Kharkiv, the second largest Ukrainian city. And as you would imagine, it has become really difficult to rely on the banking system to withdraw money from a bank. But internet is functioning 24/7. And in fact, more of the monetary transactions are done using the oldest form of digital money, e-money. In other words, transactions that are done computer to computer. So we have to think about the world of digital money also as adding resilience. And we know from the case of the Bahamas that their sand dollar served them extremely well at the time of a hurricane, when connections were only based on internet and not on physical movements. So I vote for this new world with all the importance we have to assign to standards and regulation, because without them, there will be no trust, and the system is just not going to work as we intended to.
Oh, it's such a great point, and I'm glad as well for your family in Kharkiv that this was a way of getting money to them, the digital money route versus anything else. It's such an important point to make. Augustine, let me bring you back on this, because I do think this is very important when we're talking about potential benefits, but also potential points of failure. And sort of ringing in my ear to this point is the statistic that you gave us earlier, that of all the emerging market nations that you're speaking to, 90% now are working on central bank digital coins. Is that because they are concerned about a superseding of the national currency via crypto routes if they don't have a central bank digital coin themselves? And perhaps what's the risk of it operating outside of, whether we're talking about sanctions or a nation's own capital controls? Certainly. Talk to me about that.
Yeah, it's a very important question. There are several motivations that the central banks express about their work on CBDC. One is the fact that, as society changes, society now wants to have the ability to transact digitally with central bank money. I mean, what we have seen is that cash is not being used so often, and people want to be able to use digital money to pay. Now, today, they don't have the option to do that with central bank money. Therefore, it's the obligation of central banks to give society the opportunity to do their transactions in a representation of central bank money that is superior. And that is what CBDC would be. Another very important motivation, and I already sort of mentioned it already, is the fact, in particular in many emerging markets, CBDC is looked as a very important avenue to deepen financial inclusion, to bring on board into the digital financial system vast parts of society that today do not benefit themselves from the digital world. Another very important motivation is also to create a new infrastructure. I mean, as a matter of fact, when CBDC would start operating, we would have to put on the table a brand new rails that are completely modern, that would allow us to leapfrog many of the problems that we face today. One is, as you mentioned it, interoperability in different payment and transactional systems in the domestic economy, but also internationally, cross-border payments. We can get rid of all the systems we have today that are completely stale. And therefore, this would imply a huge advance. And you also mentioned the fact of sovereignty is very important. You don't want a stable coin or even a CBDC issued by another country that brings all these facilities to overcome the use of your own currency. And that's why central banks see this as essential. So I think that there are many reasons. The challenge is huge, but it's something that I think we should get going with.
Mm-hmm. Yeah, it's fascinating, isn't it? Because I do feel like in many ways what we've seen with the sanctions on Russia is that the US dollar has been weaponized in a way that we've never really seen to this extent before. And certainly for certain, let's call them less friendly nations, they're looking at crypto and alternatives to the US dollar, I think, in a very different light. And I've certainly had those conversations. It could have profound effects for the relative degree of integration or disintegration or disintermediation, I think, that we could see in the financial sector going forward. It could also have profound effects for the world's reserve currency. Christina, how are you viewing that? Whether it's the future of world reserve currencies, the future of the US dollar, the soul of money, I think, as Agustin has called it in the past, is trust. Your take on this, please. Kristalina first.
We have seen over the last decades diversification of reserve currencies, even before the events caused by the war. The US dollar has reduced its share in reserves by about 10%, from 70 to slightly under 60%. What is this 10% in composition? Well, primarily other vibrant open economies with sound institutions like Australia, Switzerland. Three-quarters went to countries with very vibrant market economies, deep capital markets. 1/4 to the yuan, to the Chinese currency. And I'm making this point because reserves are also about reliability of the institutions, rule of law, predictability of regulatory changes, as well as the depth of capital markets. And that is going to be, for quite some time, determined by the size and the underpinning institutional foundation of the US economy in favor of a role for the US dollar. Of course, we are going to see more dynamism in the world of money. One, the topic we are discussing here, the rapid step up of digital currencies, especially central bank digital currencies, that would have some implications for how reserves are going to look like in the future. And of course, the shifts that are happening in the world economy. But at the IMF, for those who are saying, well, maybe we should move away from the dollar, well, not that fast, because there are reasons why the dollar, the euro, the yen, the pound are currencies that the Swiss franc are currencies held in reserves that are very deeply related to the economies, their competitiveness, and this non-tangible but very important trust in the independence of their central banks, of their institutions.
So you're not adding a Bitcoin or a CBDC to that basket anytime soon. I think that's the message for now.
Well, no, I am the first to say that we are in a rapidly changing world, but fundamentals continue to matter tremendously. When you have a vibrant, competitive economy, it works wonders in terms of your standing in the world.
Agustin, final word to you. The soul of money is trust. In your words, it was a speech you did back in January, and I'll always remember it. I think many believe that crypto was born out of a lack of trust in traditional institutions. How do we ensure that the future is focused on the benefits of that innovation and we improve upon the system that we've had up until now?
Yes, I think trust is very important, but trust it refers in my speech to all the institutional aspects that are behind central banks and that they provide at the end of the day integrity, safety, liquidity, and finality. As we have seen, cyber currencies have not displaced the role of traditional money. I mean, as a matter of fact, they have grown a lot, but most of the use of it is as a speculative asset. That's why, I mean, central banks, if we see where have they come from, is they have been the institution to guarantee the value of money. And so far, the central banks have done a tremendously good job. yes, there are some issues where central banks have to react. For example, now with respect to inflation, central banks probably will have to tighten monetary policy to basically protect the value of money, the purchasing power of money. But that has been tremendously powerful. Now, the big challenge as we move forward is how that trust in the central bank can be leveraged to bring all this into the new technological world, where all these benefits that innovation is bringing are facilitated by the trust in money. And I think that's the big challenge we face, and we're working very hard on that.
And that's the conversation of our next panel. We've just found it. To you both, thank you so much for your time today. Great conversation. And I think my strongest takeaway is, in terms of the future of innovation and the progress that we make, rush slowly. We'll get there, but let's do it right. The Managing Director of the International Monetary Fund, the General Manager of the Bank of International Settlements. Thank you to you both.
Thank you.
From us.
Thank you.